Could you talk a little bit about just the shift? I mean, that we've talked, 2019, we would have been having a completely different conversation. So can
Yeah.
you just talk about that shift?
Yeah. Our industry has kind of been through the gamut in 2020 thus far. A lot of people were very uncertain at the outset of COVID, given the relatively rocky start to Q1 entering into Q2. We saw lots of projects, have significant delays or budget increases due to supply chain interruptions, workshop and supplier shutdowns, logistics and shipping backlogs. But really, through the real quarantine period on the first wave here in Canada, it was quickly really determined that mining is an essential service, and I
Yeah.
believe really has become a leader with respect to other industries in terms of being able to operate in that sort of next normal landscape that was relatively unfamiliar at the outset of 2020. So what we saw is a lot of companies, whether they be owners or engineering companies or suppliers, really pivot quite dramatically through that period and accommodate new technologies and new processes to account for the changes that they were experiencing. And this was all sort of backed up throughout the spring and the summer in an increasing price in precious metals. And when that sort of confluence of events really starts to happen, we start to see a critical mass start to generate within the industry. September, we've seen a little bit of a retraction in gold price, but a lot of people have strong commitment to the fundamentals of precious metals moving forwards, and it's really enabled a lot of projects that we've been working with to accelerate their activities pretty dramatically. A number of projects that had maybe published a PFS or an FS in 2019 with a marginal or lower than expected IRR NPV, now are projects that are becoming very rapidly shovel ready for construction due to these higher margins that are now being able to be reported by some of the senior producers and the expectations from some of the mid-tier and junior companies. Our industry is relatively interesting because it's a capital competitive industry. The money goes to the best projects because investors, as they should, are desiring the best returns that they can invest a dollar in, and really this marginal increase in profitability has enticed new investors to the industry, and moreover, a lot of companies that we're now working with, because of these higher operating margins, are able to pay through their own cash flow,
Yeah,
either
I
for
want to talk about that.
expansions
Yeah.
or new project development. So it allows added flexibility for them to not need to go to external financing to justify these new capital projects.